Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour With AI. Institutional capital is retreating from digital assets at a pace that demands attention. BlackRock's IBIT recorded a $214 million outflow on June 5, 2026. This exit is not an isolated event. It extends a $4.4 billion redemption trend over just 13 days. The pressure is visible in Bitcoin's price action, which hovers near $61,832. Traders are questioning whether this is a temporary correction or a structural shift in institutional appetite. The liquidity drain suggests a cautious stance among major players who previously drove the crypto rally. Meanwhile, risk-off sentiment is dominating traditional equity markets. Wall Street futures are dropping sharply as a tech-led sell-off halts any potential rally. The S&P 500 fell 2.6%, reflecting deep concern over rising geopolitical risks. Specifically, threats regarding an Iran ceasefire are weighing heavily on investor confidence. This volatility is forcing a re-evaluation of portfolio exposure. Investors are moving away from high-beta tech stocks toward safer havens. The correlation between geopolitical tension and market decline is becoming increasingly pronounced. This environment is testing the resilience of global supply chains and corporate earnings guidance. On the macro front, structural shifts in Asia are offering a counter-narrative to Western volatility. China's seaport economy has reached a staggering 7 trillion Chinese yuan in 2025. This growth is driven by a strategic pivot toward emerging industries. The data highlights a distinct divergence between inland and coastal growth patterns. Coastal ports are seeing accelerated throughput, signaling a rapid realignment of global trade routes. This strategic shift has significant implications for global supply chains. It suggests that manufacturing hubs are moving closer to consumption centers, altering logistics costs and delivery timelines for multinational corporations. In related news, retail behavior in India is adapting to this global uncertainty. Indian retail investors are increasingly relying on digital calculators for SIP, PPF, and NPS planning. This shift indicates a desire for precision and control amidst market turbulence. Investors are using these tools to manage loan installments and optimize wealth creation. The move toward digital planning tools reflects a broader trend of data-driven decision-making among retail participants. It underscores the growing sophistication of individual investors who are no longer passive observers but active managers of their financial futures. Looking at precious metals, StoneX's June 8 weekly analysis highlights critical support and resistance levels for gold and silver. As geopolitical risks persist, these metals remain key indicators of market sentiment. The dynamics suggest that investors are hedging against both currency fluctuations and geopolitical instability. The interplay between crypto outflows, equity sell-offs, and strategic shifts in China creates a complex landscape. Market participants must navigate these diverging forces carefully. The focus remains on how institutional capital flows will evolve in the coming weeks. That's your market briefing. Follow Rumour With AI for daily market intelligence.